Good morning, everybody. Happy NCAA round one of the tournament day. So I'm going to give you my official selections because it wins me nothing other than maybe a pool or two that I probably forgot to pay for and officially enter, but that's okay. All right. Who's going to win the NCAA tournament? Well, according to Donkey Ball, one of my poker nicknames is Donkey Doo. So my bracket is Donkey Ball. We are going to see some big upsets, but not right away. Alabama getting to the Elite Eight, but then the Baylor Bears beat them and go to the Final Four. What about the other side? Going down to the East. Oh, why don't we hop on over here to the Midwest? Houston. And they got, three guys that are going to be pro, so they're going to roll for a while. Houston, number one, all the way to the Final Four. I hate doing that, but I don't see anybody else in this bracket really taking off. I think here's your big upset. I think Kennesaw State beats Xavier. I think Xavier looked like crap in the Big East against Marquette. I think that they are ripe to be upset. And because of that, they'll probably win by 80. But I'm going with Kennesaw State. There's your surprise champion, Marquette. I'll tell you what, best team basketball I've seen in NCAA in quite a while. I actually think that Marquette has a pretty favorable path to the Final Four. Kansas, man, are they loaded. All right, they're just loaded. Hard to pick against them. However, Arkansas is really good. If Kansas is going to lose, I think they might lose early. Arkansas is really good. I'm still going to pick Kansas, but that's one to watch. St. Mary's is very good. I think UConn is a little bit ahead of themselves. They think they're much better than they are. I think St. Mary's is going to stuff it to them. This is another game that Kansas could lose. I think Kansas has a tough road. You know, they get to Gonzaga that just can score a million points. That's a tough one. This is a really tough bracket. I think the West is a really good bracket. If you pick the West right, you might win your pool. But Gonzaga, you know, they could kick everybody's butt just by scoring 100 points. TCU is good. Arizona State is good. Just Grand Canyon School is pretty good. Boise State don't know much about. You know, taking Northwestern just because I'm a Big Ten kid, but see Boise State winning here just because I don't know anything about it. UCLA, Gonzaga. I mean, this is going to be a great game if we get that. This is going to be a great game. I'll tell you what, I'm taking a look at this. I just started watching NCAA basketball after, you know, I watched a few games in December, but I haven't watched any until like the last week. Watched the championships, and I think I got a good taste of what's going on out there. So we're going to have a really boring 1, 2, 3 Final Four. So, of course, by me saying that, pick your 14 seed to get to the Final Four. All right. So now that we got that out of the way, I was going to do a top 64 dividend stocks and top 64 growth stocks. And I was up until 4 a.m. one day doing that. Got a lot of research done. But man, putting together brackets, sticking an article is just too hard. So, you know, maybe we'll do a Sweet 16 or something. All right. What's in the news? Oh, bank bailouts. So Credit Suisse is getting bailed out over in Switzerland. The Federal Reserve has said they're willing to help any systemic bank that has operations in the United States, even if they're an international bank. We have a bailout happening over at First Republic. We talked about them on Monday, and it is coming from JP Morgan, Citigroup, and Bank of America, who have been asked to chip in. So basically, they need investments on their balance sheet, and they're going to invest in another bank, and the Federal Reserve is going to de-risk it for them. So basically, giving money to the big banks, which is why I think your mid-sized banks are about to become big banks by merger, or they're going to sell off assets and shrink down. So I think that a lot of these mid-tier banks are going to go one way or the other, smaller or bigger by merger. And I think we're going to come out of this with 3 or 4 more big national banks. And I think that you're going to see some of the banks that operate across 2, 3, 4, 5 states, 6 states, shrink down back to a home state or split up into home state banks. I think you're going to see a lot of action in the banking sector. What Shooter and I talked about on Monday, and I think is pretty spot on, is that you're going to see a total of about a 50% correction in the mid-tier banks and the regional banking ETF. We're pretty close to that. It went from 70 something to middle 40s. Not sure where it is today. Let's take a look. KRE is up a little bit after the bailouts and the First Republic news. What the Fed has done, in essence, is given all these banks 1 to 2 years to muddle through having bonds that are underwater. What does that tell you about the likely actions of the Federal Reserve a year or two from now? Are they still going to be raising interest rates, or do you think those interest rates start to come down? We're in another one of those transition periods, just like we're on a big transition period into the AI, IoT age. We are in a big transition to clean energy. We are also in a huge monetary transition now that the Fed has mostly reloaded their bazooka. And if you've been paying attention to Bloomberg and the other breathy people on TV, Bloomberg is the least breathy. So if you're over on CNBC because you like the excitement, have at it. If you're on Fox Business, cut it out. But what we're in right now is a monetary transition, and it's not going to work the way people think. 4 out of 5 people are going to get it wrong because they're following a narrative that is false. The dollar is not going to crash. It is going to chop along and maybe drift down to stimulate the economy. But in an era where energy gets cheap again, King Dollar is bigger now than it was before. King Dollar is more powerful, and it's going to stay powerful again for the rest of our lifetimes. There's nobody here who's going to live to see a dollar crash, unless it's because all currencies crash and Bitcoin goes to the moon. Now, I will tell you, since I was pounding the table in the autumn for everybody to buy Bitcoin, it's up what, 20, 30%? It's a pretty good move for a fake currency, right? And what's happening? Who are these marginal buyers? Well, it started with some emerging markets action, right, down in Central America. And then the family offices, I showed you that they were starting to get in. Now the retail people who were squeezed out and panicked and sold, now they're getting back in. MicroStrategies continued to buy. Bitcoin is going to be part of the global currency system. It is a hedge against a dollar that is going to get too strong. It is a way for emerging economies, which are going to account for 80 to 90% of the growth over the next couple decades, to hedge against a strong dollar without having to turn to a dishonest Chinese currency, a limited Japanese currency, a limited yen, and a euro that's stuck in mediocre land. Europe's never going to grow again. A, they don't have the room to put people. B, they don't have the resources. Right? They can barely feed themselves. I mean, think that through. Russia's pressure on Ukraine exposed how vulnerable food is for most of the world, excluding the United States. We are really the only breadbasket left on Earth. So when you take a look at all these things, from the NCAA tournament to aliens to banking to energy to food, it all points to the dollar. You missed that, huh? NCAA tournament is important. How much money is getting bet on that? A couple $zillion? How rich are we? I keep telling you, the United States is rich, like rapper rich, right? Richard Pryor rich, Chris Rock rich, LeBron James rich, Elon Musk rich. I mean, just keep going down the list. We're so rich. We're top heavy, not as top heavy as a lot of places. And as that top heavy trickles down, which I hate to use that term, I do, as the middle class in a tight labor market continues to be employed and getting raises, when the price of energy comes down and transportation comes down and housing comes down, when all these transitions come out in the wash just a few years from now, I really just keep pointing to 2026, you're going to see a massive long-term bull market in the United States, economically and financially, in an era where it doesn't take crushing the dollar or beating up the dollar to do it, which is why I tell you the dollar is going to stay strong and you have to adapt to that. You have to make your investments with that second tier thinking and third tier thinking, the same way that I talked to you about energy. If you want to buy oil and gas, what do you have to do, right? If you want to buy oil and gas stocks, what do you have to do when you do that analysis? What do those companies have to have? They can't just have oil and gas. They have to have a viable transition plan. They have to be part of the energy transition. Your frackers are fracked. They've high-graded themselves away from the most profitable oil that they had, right? They already fracked the easy oil. You have more projects coming on in Africa. Middle East can pump more anytime they want. President Biden just cut a deal with Conoco for the last major oil and gas project in North America. It's going to be the last one. And that's if it gets done. They still might lose the lawsuit, so it's going to drag on. But they're already building their ice roads up there. They've got the approval. I don't think any judge is going to put an injunction on it. Maybe one at a lower level, and then it'll get thrown out at appeal. That's the United States panic pumping, or just a way of being geopolitically secure. And all these other countries pumping oil. You are about to see 3 years from now, cheap energy, and because of the tight labor market, middle class doing well here, growth doing well here, which means entertainment's going to do well, right? Your Disneys of the world probably going to just keep on turning out cash. Although I tell you what, I worry about their board. So think about all the optimism that I have here. And I'm the one that was being called a perma bear the last couple of years and was mostly right. We got a QE rally that I only half participated in. When I try to explain these things, and I know that I don't always do it well, I'm trying to get you off of all these horrible traders' narratives and all the negativity, right? Negativity sells. You know what sells better? Come on, somebody type it in the box. What sells better than negativity? They're not a salesman among you? Say it. I'm going to go Sam Kinison on you. Say it. What sells better than negativity? Come on, Tesla. Sell it with sex. Vince on point again. Yes, I am telling you, the world is a sexy, sexy place. It's most sexy in the United States and North America, in the emerging markets. Think of it like this. The emerging markets are like the red districts, right? Red light districts. Is that what they're called? Never been to one. They're the red light districts, right? You might get mugged in the alley. The United States, though, that's Times Square, the Las Vegas Strip, Malibu Beach, right? That's the United States. So you got super sexy in both places. One's more dangerous than the other. Not that you can't take your lumps in Vegas. I have learned firsthand. But you better get off the fear and panic right now. The Federal Reserve and the central banks know how to prevent a mass crisis. They just showed you how they're going to do it. They're going to let some stocks go to zero and some companies get wiped out, but they're going to take care of the depositors, just like I said in this week's article. And it is exactly what you asked for, right? The Federal Reserve did exactly what you asked for with Silicon Valley Bank. Back during the financial crisis, you asked for them to bail out the homeowners and the depositors and all the people who were affected by the layoffs. And you were mad about the executives getting away with their bonuses, nobody going to jail, and the bank stocks, after falling, basically getting backstopped by the government and the Federal Reserve and setting new all-time highs a few years later. Even though, and I've talked about this, all the times I drove through the country, and I always stopped in Beaver Falls, Pennsylvania, and a few other places between Milwaukee and the East Coast. Big hunks of America, particularly in Pennsylvania, also Ohio and Indiana, that did not participate in the financial expansion that hit the East Coast, mainly due to the loose money. We are seeing a normalization across multiple parts of the economy and transitions. And I understand the transitions scare people. I was thinking about making a David Chappelle joke right there, but I thought I should back off. And you got to take a look at it for what it is. A great time to get ready to buy. And I'm not saying buy it en masse right now. It's always scale in and scale in slowly because you have to be afraid of the falling knife. But sometime this year, maybe next year, but I think this year, you're going to want to scale in over the course of 6 to 8 weeks. Just bam, go from heavy cash to like all the way invested, whatever all the way is for you. Meanwhile, technology just keeps chugging along. Now, because so many things change with technology so fast, you always have to be on the lookout for what's going to disrupt your investments and what's going to help your investments. Google is on both sides of a lot of things. Microsoft is going to try to dip into their search marketing. And I tell you, incrementally, I think this is going to help Microsoft. Incrementally, I think it's going to hurt Google. But Google just turned around and talked about something that I told you about, 6 months ago, 8 months ago, 10 months ago, something like that, with how the proteins that the AI decoded and structured are going to change medicine. how there's a couple of companies out there on the data side with Google, right? Data and AI. Platform companies, really the only one going right now is Ginkgo Bioworks. Then a handful of the big pharma companies are really going to benefit. Then you're going to have companies that really lose. We're seeing a great divergence between winners and losers. You need to become very comfortable with that because it didn't happen since the financial crisis. Way too many winners from 2009 to 2019. And then the COVID distortion, crash and spike. And now we're getting back to the levels. And when I set my bottom fishing prices in 2021, people told me would never, ever happen again. If you've been here and seen me put bottom fishing prices on things in 2021 and saw that one kid tell me that I was out of my mind, that ARK would go under 100, much less under 80, right? Some kid, you're out of your mind. ARK will never go under 100, much less 80. And I was saying probably under 60 and gradually amended that to in the 30s. Here we are in the 30s, right? Lots of hopium out there. Took a year and a half for it to deflate. What I'm telling you is that it's mostly deflated, except there's one more batch of large cap losers that have share prices that have to, drop to reflect that they're losers. And that's it. Small caps are beat to hell. Mid caps are beat to hell. Emerging markets were beat to hell. We're seeing some large caps get beat up right now. A lot of the banks still have to come down more. When banks fall, other things fall because people get scared. We are darn close to the end of this bear market. I don't know if it's next week. I don't know if it's next month. I don't know if it's at the end of the year. Around Labor Day still makes a lot of sense to me because the Federal Reserve is still fighting the energy inflation pressure from Russia, OPEC, and China. So we need to get past drive season because if gasoline is expensive this summer, then everybody gets angry. So they're going to try to keep gasoline prices down, just like Trump did. It's not a either or thing with the parties. They both know that everybody's sensitive to gasoline, but with EV sales growing at double digits, right? What was it 17% growth last year? And now 1 out of every 11 cars sold is an EV. It's something like that. Well, there you go. That's 1 out of 11 people who don't care about gasoline prices anymore. So I think this is probably the end of having to fight gasoline inflation and energy inflation. And the Conoco deal is basically the nail in the coffin on that fight. It's what I told you about over a year ago was coming. I said over and over again, look, at some point the government makes a deal with big oil to refill the strategic petroleum reserve. It's kind of what Alaska was intended to be anyway. That's what they're using it for. I thought it would be Exxon, Chevron, but they're the ones doing offshore drilling. Conoco's really gotten out of the offshore game. They got rid of their exploration budget, I think, 5 years ago. Been a long time. So Conoco, which acquired Permian land and now is going to do the Arctic, that's it. That's your other oil major now in this country, along with Occidental once it gets absorbed by Berkshire or goes through more mergers. The wildcatters are all going to die. Frackers are all going to die. There'll be a couple that end up in carbon capture. But even that business is going to have limitations. So don't worry, be happy. That's my message today. If you don't believe me today, drink a lot tomorrow on St. Patrick's Day, and maybe you'll believe me by the end of the day. By the time you hear this, it's probably St. Patrick's Day. Watch some basketball. So I'm going to show you something now that I'm doing. I am changing the Global Trends ETF to a quarterly report, and then I'm going to do more weekly updates. So I will highlight different ETFs and different trades. This way, our framework is easier to deal with, and it's largely based on two things that I'm doing now that I hadn't done for a while. One, I'm back in the 401k business and just closed another deal. So I am operating a 401k structure where I've picked out funds, no industry funds because I don't want people to blow themselves up, but there are sector funds that are wider. And the company I'm using called Employee Fiduciary allows me to actually manage an asset allocation. So we have the LifePath target date funds with BlackRock, which are defaults. But then I am operating something I call Blue Mountain Growth. It's an ETF growth asset allocation from the menu. And for most people who are working full time, it's tough for them to spend, with family and everything, and trying to have a life, it's tough for them to spend 5 to 10 hours a week on their investments. And I think that's what it takes to manage your own money. If you don't have 5 to 10 hours a week to manage your own money, you ought to just hire me. I'm telling you, you ought to just hire me. But this Blue Mountain Growth, pretty much just going to manage it for people using these funds. And in the 401k, I'm only going to make one trade a month. Anything more would be obnoxious, self-defeating probably, but I've added more funds. So in the Global Trends ETF, and I'm not done with the article, I still got to write my quick thoughts, talk about the 3 slices, your target cash slice, right? Cash slice, based on whether you're aggressive, moderate, or defensive. Most retirees will end up in these 2 categories, moderate or defensive. And most people who are working will be aggressive or moderate, right? There's overlap in the moderate. Core holding slice, this is what you should be working to each quarter. You have to decide how much you want in your core. Could be all your money. You might not do anything but core. So I want to show you funds that I'm using there. Using 4 different funds. I'm using 4 different funds. I just want to compare them to the S&P 500 since Q4 of 2018. One of them's track record only goes back to 2018. But notice SPY is the worst one. I have to include SPY in a 401k, otherwise the government gets mad. But all these other funds do better. What are they? The iShares Evolve Technology, which is very similar to QQQ, but it holds a couple hundred more stocks. And they expand the definition of technology to include companies that use technology well. JP Morgan, for example, is in this index. Not a very big percentage, but it's in there. You know, you don't see JP Morgan in a tech ETF or the Invesco QQQ. They are a company that uses technology well. You have the Invesco S&P 500 GARP, very simple approach that beats SPY. Invesco multi-factor. Now, this is important because the Russell 1000, which dives more into the mid caps, and their factor formula is fairly simple and I think makes a lot of sense. Then we have the BlackRock Science and Tech Trust, which sells options for premium and kicks out a pretty fat dividend. So depending on who you are, right, a retiree or you're still working, I think that's the right way to look at it. You should work in these directions for your core asset allocation. Berkshire Hathaway, everybody should have a little bit of. To me, because they own so many companies, it's like an ETF or a closed-end fund, but it trades like a stock. Invesco Mid-Cap Momentum and Mid-Cap Quality, different approaches, but these 2 both outperform the market. And then Momentum and Revenue. So similar concepts. You notice a lot of Invesco, I just tell you what, I think Invesco and BlackRock are the monsters. I actually think Spider's got some problems. I think they should probably sell their asset management business or something. I'm not really sure what they should do. Maybe get bought by a giant insurance company. Maybe get bought by Berkshire. I'm not positive, but Spider's got problems right now. The REITs basket, there just is not a good ETF or closed-end fund in existence. There's just not. You just need to buy your own 5 or 6 REITs and do it that way. On Monday, we'll talk about one that I want. So when you take a look at these charts, I want to point out on the weekly chart, take a look at the relative strength index, which we've talked about before. And I use a slightly different, on the longer term charts, I use different RSI numbers, but they're still pretty close. It looks like we got a good trend coming here, right? Higher lows. That's the bull case. But then you take a look at the monthly and you start to go, not so sure. Is that a bottom? Well, let's take a look. Well, it goes back to 2012, but it could be a bottom. Take a look at SPY, just so we can take a look at the index. There you go. Was that a bottom, right? Double bottom, June, October. Tom Lee thinks it was. With the way that they're bailing out the depositors, I think we're going to avoid any type of financial crisis or banking crisis. I think this is the way it's going to look. I think that the central banks are not going to let it get away from them. I think deep down they know that it's a problem and they're willing to fix it. But they are not going to save the shareholders or the executives. Even the bondholders are going to get a little bit of a haircut. It'll be kind of your standard, cost of entry haircut. Not we get half. It's going to be like, okay, well, we'll take 5% off the top. Literally 5%. That seems to be pretty standard the way they do it. So do we get one more dip here? I think a lot depends on the Fed next week. If they don't raise interest rates next week, I think that sends a sign of panic and we get a deeper correction. I think that if they raise interest rates a half a point, they're probably doing it because they know it's the last time they can, but it's probably overkill, and that also hurts the market. If they raise a quarter point, they are really shooting for Goldilocks. I think that a quarter point tells the world, tells the investing community, hey, we still see disinflation happening, but we still have to be wary for a resurgence. You'll never hear Powell say OPEC or Russia, I don't think. If he has, I missed it or I forgot about it. He has mentioned China. If they raise a quarter point, I think that's consistent with what he's been saying for the last couple months, which is we're starting to get inflation under control, but we still have to be worried about it. So we're going to raise interest rates just a little bit to keep trying to nudge it down. And I think that also plays into the idea that if there's a big developed market recession coming, it's probably going to be out of Europe. But again, while they don't have a ton of upside, they don't have a lot of downside, I don't think either. I think there is a lot of shortchanging the Goldilocks scenario right now because it's not the popular narrative. So while I was the perma bear, right, I was warning everybody in the second half of 2021 that they were living on a fantasy. I'm telling you right now, I think you are about to see, there might be one more kick in the junk, but I think you're about to see a pretty amazing positive trajectory, not only in the economy, but in the financial markets, where the winners really stand out and so do losers. So people who are holding on to companies that can't benefit from technology, have shrinking client bases, demand a ton of CapEx, just get back to even, they're going to lose. Companies that have growth and good to improving balance sheets, and they use technology well, and they're cutting the fat where they were supposed to cut the fat, I'll just throw out Warner Brothers Discovery here. You should buy that. If you don't have a full position on Warner Brothers Discovery, you're not reading their website. Go to their investor pages. Warner Brothers Discovery is going to triple for sure. Not guaranteed. That's different. Guarantees are different. Faux show means you better pay attention. I think Time Warner Brothers Discovery, HBO Max, whatever they're calling themselves nowadays, $40 stock in 3 years. When the new Superman movie comes out, when the new Batman comes out, holy cow. I tell you what, they have a kid in Gotham, right? The show Gotham. He might be the next Batman. I'm not positive. Not sure if he's quite got the acting chops. Seems like he's trying. He might be the next Batman. We'll see. They might go with somebody just a little older. They might age it up. They already did that with a couple characters. But just like Warner Brothers Discovery is changing the Justice League, giving them a multiverse, they really, they were second there. Marvel just made it more exciting. And of course, Star Trek invented it. The world is changing. And I promise you it's changing for the better. What's the caveat? As long as we don't blow it up. We got a lot of good things going on. A lot of it's technology driven. A lot of it is the halo effect around this continent. Do not discount the power of the Canada, United States, Mexico economy that I told you was coming 5, 6, 7, 8 years ago. I talked about that on MarketWatch, that eventually we'd be a trade block all to ourselves. You see Tesla building a plant in Mexico. It's brilliant. Why would they do more across the world beyond what the demand across the world is going to be? They're right down the train line for supply chain from the United States, easy access to selling into South America, Central America, the labor advantage in Mexico, which while labor advantages are dissipating, they're still there, taking another generation to completely offset them. But they're already starting to get to the point where it doesn't make sense to put things on barges, which is why if you're in the shipping industry, you should be selling, right? You bought it a couple of years ago, you doubled or tripled your money, get the heck out. That trade is done, right? It's a position trade. You own those for 2 or 3 years. So in any case, I will finish this up this weekend I'm actually going to watch basketball and sit in the bar tomorrow after I watch my grandkids in the morning. I will get this out this weekend. It's my first priority. And then we have plug and play growth stocks and plug and play dividend stocks. And we will get the tactical and trading slice up and running so that every week we have 1 or 2 trades, and we will feature a lot of Shooter in that because he is the month-to-month trading guy. So if you want to do some tactical trading with the ETFs, you will get that from now on. And that is why I'm actually going to raise the price of the service at margin of safety by $100 at the end of the year. But we'll establish it. You all still get to keep it for what you're at. But if you know somebody, or if you want to talk about it in the comments from my articles, I know a few of you, Wolf, you've been doing it. If you want to talk up margin of safety in these articles, write some 5-star reviews. That'd be great for getting people into the chat room. And like this guy, he's been talking about AST Space Mobile and AT&T. He's right on that thesis that I threw out there a year ago. So next article series on AT&T is coming. There'll be 2 or 3 pieces. Going to talk about some of the growth stocks that are, I think, just about done with their hell year. And away we go. All right. Enjoy the NCAA tournament. I don't know who your team is, but here's my Final Four. Copy it if you want to. It's probably wrong. All right. Take care.